Okay, let's take a look at some trading strategies in sideways markets now. Doc, that's the best way to understand these markets. If you were to set up a trade in this, how would we do it?
I showed you earlier a chart with Bollinger Bands, and which I was wanting to combine with stochastic. I think these are two very ideal set of tools that one could use to trade the sideways market. What I have here, and what I also want to stress here, and by using this particular example, this is something I'm going to use on a weekly chart. You know, you can use these tools on any time frame chart. You can do it on an intraday chart like I'd shown you earlier in an example. You can do it of a daily chart, and now I'm going to use it on ACC on the weekly chart, because ACC is a share which has been stuck in a range for a very long time, right? So I've set up this particular chart with Bollinger Bands and the stochastic, and the rule that we are going to make is whenever the prices go and hit the let's say the top Bollinger Band, we are going to take it as being an overbought situation, which is going to get confirmed by the stochastic. So the stochastic has to ride up to the overbought and then break the overbought. So when both these situations are present, we are going to take a sell, and exactly vice versa at the bottom, right? So now here is something that I've set up. Now here you have a situation where the top band has been hit. So here we'll actually take a short with this, right? Because you have the Bollinger Band which has been hit and the prices are below, and let's allow this trade now to run a little. So we actually find that the prices are moving down, and we will try and stop it now. Okay, now this is a situation where the lower Bollinger Band has been hit. But now take a look at let's say the stochastic. The stochastic has still not gone into oversold. So it looks like this share has got some more room to run. So we will first allow it to run down there, and now we find that the lower Bollinger Band has been hit and the prices have moved up, and here the stochastic has moved up from the oversold area. So here is where we would look to, you know, close out the short, and we could actually go long.
So you're waiting actually for the stochastic to cut and go into the oversold territory, and then start to rise up again before you get out of your trade.
Yeah, exactly. Because what we want to do, or what we are achieving here, is we are using the bands to define the range and the price. Because the price is in a range, we want an overbought, oversold definition. For that, we are using the Bollinger Band. And then we want to have a trigger for a trade. And the trigger for a trade, we are using the stochastic. So the stochastic is also a range oscillator. So when it slips from the overbought, we would like to take a sell. And when it moves down into the oversold, that is where we sort of ready to take a profit. And when it moves out of the oversold, that is where we do take a profit. Right, so we keep doing this over and over again. And as long as the stock is in a range, it will keep giving us this sort of trades.
All right. Well, that was one sideways strategy for you, using Bollinger Bands, moving between up and the points in overbought and oversold. But it's that time of the show when we tell you about whether your analysis on our chart quiz was right or wrong. Doc, there were a lot of viewer response queries we got. Which one did you choose?
In the last week, we had asked you to respond with your views on the NIFTY as well as PUNJ LLOYD. What is interesting here is that most people have been absolutely spot on with their analysis. Everybody had a bullish view on NIFTY. Most people, if not all, had a very firmly bullish view on PUNJ LLOYD. And the NIFTY as well as PUNJ LLOYD have actually turned out very well indeed over the week. Prior to going on, lots of entries. So prior to going on to trying to pick the correct one, or the one which I like best, I would like to make mention of some noteworthy ones. Akash Joshi from Bhavnagar, I think you have been writing into us for all the 3 episodes. Thank you very much for that. You are on the right track, Akash, but I think your work needs a little bit, you know, a little bit of structuring and a little bit of detailing. You're sort of far too succinct, so I think if you improve your presentation a bit, it could be a lot better. The other one that I would like to mention is Anuradha Kumar from Mumbai. I really like the way that you've done the thing, you know, for this week, putting it in the form of tables. You didn't attach a chart, but I think the way you presented it in the form of a table with weekly set of indicators on one side and the daily set of indicators on the other, it was, I think, very well done. Okay, the winner for this week is an entry sent in by Asim Nafade. I think the way he has gone about it is very structured. That is the reason, like I said in the last week, what I would like to really see is a nice structured and well organized kind of presentation, wherein you look at each and every tool in you know, sort of individually, and then put it all together sort of collectively, so that it becomes easier for you to arrive at a conclusion. That's exactly what Asim has done. He's gone about it looking at candlesticks, oscillators, moving averages, etc. And then he has arrived at a conclusion which he has stated upfront in a very, very nice way, stating that this is what I expect the Nifty to do across the next 10 to 14 days. I think that's the kind of thing that we are really looking at. He's marked it out on his charts, he's marked it out on his analysis. Very, very good indeed. Very good job, Asim. Keep it up.
Well, thanks for that, Doc. And do keep sending in your answers because they really are interesting to read, and tell us what more it is that you want to know and learn from our show. For next week, then, the chart quiz. Take a look at the Nifty once again on a 2 to 3 week horizon, as also the chart for gold, and tell us which way do you expect it to go. So before we sign off then on this show, it's time for the tip of the week. Doc, what would you pick today?
What I want to stress here is, based on what I've shown today, make trading with technical analysis a process. You know, if you set up the right set of rules, pick the right set of tools and make the rules for that, it'll actually become a process, and then that will completely take the guesswork out of trading, and that will give you better results and more consistent results. So make it a process.
Right. Okay then, time to say goodbye. Next week when we come back, it will be a very interesting chart formation that we'll discuss, the dead cat bounce. So to see that, do tune in next week. Till then, please stay tuned.